Hey guys, hope you guys had a good week this week of trading. So taking a look here at the SPY daily. So you can see we're pretty much in this bigger kind of breakout triangle pattern that's formed here. But also on a short term, we are in this bear channel right here. So the biggest thing that I note from a daily time frame is that we are trading in this 453.3 to 436.2 channel now since August 2nd. So really, until we can break over this level or under this level, there really just isn't much that we can really do. We're just kind of chopping, and we are dead center in this channel right now. The one big thing that I know after losing the 8 and 20 EMA support, yes, we did hold the 50 EMA support, but we went up for a back test of those EMAs and we immediately rejected. I will look for a downside continuation day tomorrow on Monday. That should give us a test of the 443.1 area, which should be the 50 EMA. If we close below that level, then I do like further downside into the 430s again. However, if we can either bounce or if we just actually get a push and a fake out on this doji, and we can get back over the 8 EMA, then I'm going to be looking for the 450s again. From a weekly standpoint, we don't really have a whole lot going on. Same thing, our range is really 437.5 to 457. We just don't have a new supply. We don't really have a lot of direction. You can see we kind of have this nice diamond pattern formed here though. So either way, we're going to see potentially a bigger move. One thing I am watching is this weekly 8 EMA. So we did get not quite a double top, but we did get the move back down. So one thing I want to watch is if we lose this weekly 8 EMA support at 444.5, then likely we're going to be back in the 430s. However, if we can get a double bottom bounce up and close over 451.3, I feel pretty solid about a move to the upper 450s, maybe even 460s into the end of the month. Keep in mind, CPI is on Wednesday. As of right now, the numbers that I am seeing show that pretty much consensus is going to be higher than previous. And the numbers I'm seeing actually show that most likely than not, we're not only going to see another rebound to the upside, especially a massive rebound on month over month and year over year CPI, especially month over month. But most likely we will get a miss of consensus also. So it will not only be, like I said, a rebound to the upside, but it'll also be higher than predicted. Looking at futures here, futures is kind of thrown off right now. We had the new contracts roll last night. So it really rolls on Monday, but TradingView does it one day early. So our candle's a little messed up here. We should actually be under the 8 and 20 and 50 EMA. This is one thing that trading futures is hard. And one also thing that makes it even more difficult is trading from contract to contract to contract. So, there's historical levels that still play out. So this was our last contract right here. This was that massive gap up. Over time, realistically, it works itself out. But for the short term, for about a week or two, it really is kind of a pain. And it just throws our levels off. So as of right now, we're going to be watching our 45.30 and 45.40 levels. Those are our major resistance levels to watch. So it is notable, and this is something I've watched futures for quite a long time now alongside SPY. And one thing that's incredible to me, even with our contract roll, so this was, I think, a 50-point gap up they did for the contract roll. But even with that contract roll, the levels that were previously established under a different contract, they almost always still play out. Now, our patterns will be slightly different, and that is something that we keep in mind. So like right here, we do have a actual slight bull channel that we're watching right here. So this bull channel likely will actually play out, and I've noticed it a lot when I watch these contract rules that even though we get completely different levels because of the contract rule, for the most part, it still plays out to those levels. So these supplies and these demands up here and this demand down here, I expect them to be very much so in pattern. From a weekly standpoint here, we would have closed under our weekly 8 EMA, but we actually are showing us over it. But we still got our 45-20 double top. So what I'm looking for here is a potential supply to be put in here, and then to come back down to this 43.79 area. If the chance that we get a good CPI, we actually could push to 46.08. That is our upside target. As you can see, since realistically June, we have been trading in this same pretty relatively small range if you consider how long we've been in it. We've been in about a 228 point range for almost 3 months now. That's a very long time. Going over to the Qs here, you can see we are in our downtrend. Much like SPY, we came down, we bounced, and then we attempted to break back through the 8 and 20 EMA, but we got a really hard rejection here. So again, I'm liking the downside move. I do see a move potentially down to 368 to test the 50 EMA, but most certainly I'm expecting us to get under the 20 EMA on Monday. From a weekly standpoint here, you can see we have the perfect diamond pattern here, one of my favorite patterns. Again, since June, we are in this 359.3 to 383.7 area. What I'm looking for is potential to either break over 378.1 or break under 366. If we break down, then we're most certainly going to the mid 350s. However, if we break out, then that's where we're going to start looking at the 400s. Again, this is all into the end of the month. Looking at the VIX here, so I've been talking about this for 3 weeks now, it seems like, but the VIX, once again, it just seems artificially suppressed. So for today, for instance, the VIX had almost a 4% drop, and until the last 5-minute candle, which I guess really the last probably couple minute candle, I was gone, so I wasn't watching it live to see how close to end it was, but I'm assuming it was pretty last second. SPY was going to get a red day today. So that's where it's interesting because for, like I said, besides pretty much, I would say Wednesday this week, the VIX has not really been supportive of what actually is happening on SPY. So again, we've been unwinding since August 25th on the VIX. And if you look at August 25th, which is right here, I mean, we are not that much higher. Yeah, we had a bigger push up here, but you can see these last 4 days now on SPY have been pretty weak days. But if you look at the VIX, these are our last 4 days. They really haven't done a whole lot. We had a push up and now we're all the way back down here. So the VIX did get a new supply at 14.82, which makes me look like we're going to be back in the 13 range here, or coming back to touch 13. When I think about the VIX over the last 3 weeks, coming into CPI and FOMC, where the markets believe we're going to pause, which I don't think we're going to pause, and more importantly than that, but we're about to get a pretty hot CPI most likely. And I don't think markets are prepared for that, even though the numbers are right in front of them. I think it makes a lot of sense why they've pushed the VIX so much lower. Taking a bad CPI and then a bad follow-up FOMC the next week with the VIX starting around 13, not a big deal. Taking a bad CPI and a bad FOMC with the VIX up in the 17s, now that's a big deal. That's going to make a lot bigger waves in the market and long term than anything else. So it makes sense to see the VIX get a little suppressed this week and the last couple weeks. And I wouldn't be surprised to see a lot more of that Monday and Tuesday. Tuesday we'll probably actually see the VIX wake up and be more normal. But until then, I expect a lot of the same downside on the VIX here. I hope you guys had a good week trading this week. It was a little bit of a rough week just because of the 4-day weeks are always tough. But I hope you guys had a good week, and I'll see you guys next week for CPI.